All right, welcome everyone to our second presentation in our 2021 Commercial Network webinar series. I'm Jeremy Yohe, ALTA's Vice President of Communications, and we've got a great presentation lined up to discuss how the Biden administration's proposal would hinder your 1031 business and the impact on like-kind exchanges, the impact they have on communities, and what you can do to help protect this important source of business and capital for affordable housing. Before starting, I do need to touch on a few housekeeping items. All participant lines are muted for today's discussion. If at any time you have a question, submit a question in the questions box. We'll pitch over to the speakers. We'll get your question answered right away. The webinar is being recorded. You'll get a link to the recording tomorrow, and you can also access all of Alta's webinars on our website at alta.org/webinars. We do need to thank FNF family of companies for sponsoring today's commercial network webinar. And before introducing today's speaker, we do have a short message from Fidelity. All right. Thank you, Fidelity, for that message. Now let me introduce today's speakers. We have the luxury to hear from several industry experts who are well-versed on 1031s. First, we have John Wunderlich. John is Executive Vice President and Regional Manager for Fidelity National Title Group. John manages title operations in the Midwest, FNF Canada, and several non-title subsidiaries. John is also president of FNF's 1031 company, Investment Property Exchange Services, and he has advocated for 1031 exchanges on Capitol Hill since 2014. Also joining us is Dawn Perio. Oh my goodness. I have violated rule number 101 of covering speaker names before we get into this, so I apologize, Dawn. Dawn is Vice President and Regional Manager in New York and New England for Westcore Land Title Insurance Company. She's worked in the industry for over 25 years, starting as a closer when she was a graduate student to owning her own title agency. Dawn is past president for the New York State Land Title Association and currently co-chairs the association's advocacy committee. And next we have Ryan McCormick. Ryan is Senior Vice President and Counsel at the Real Estate Roundtable. The Real Estate Roundtable brings together organizations to address key national policy issues relating to real estate and the overall economy. Ryan's experience includes working in the U.S. Senate, developing policy initiatives, drafting tax legislation, and devising legislative strategies to advance his members' economic priorities. And we also joining me today, we also have Elizabeth Blosser. This is kind of a rarity for Alta. We're doing our webinar together. In person. Normally it's me at home by myself, so
well, it's fun. We're it's a road show here, so working from the road. Good to be together though again.
Yeah. Well, Elizabeth is Alta's Vice President of Government Affairs. She works on several advocacy issues, including data privacy, redaction, digital closings, and items affecting commercial transactions. So if it affects your business, Elizabeth's probably working on it. So Elizabeth, thank you for joining us. And with that, we'll get into the conversation and let you start talking with the speakers.
Yeah, well, thanks to everybody for joining us for this second commercial network webinar. We've got 2 more coming up, all leading towards our first in-person meeting in a while in February. So we're talking 1031s, and I'm sure everybody participating is probably pretty familiar with 1031s, but it's always nice to have a little bit of a level set as we kick the topic off. So Dawn, would you mind just kind of giving us a little bit of an overview about 1031s and how they're used in commercial real estate transactions today?
Certainly, and thanks for having us all here today. A 1031 exchange is literally a swap of properties, right, at its most basic. So what that swap or exchange allows for is for capital gains tax to be deferred. Section 1031 of the tax code allows for this. We've seen that 1031 exchanges or tax exchanges have been around for 100 years. We've seen what we're currently working with has been in existence since the late 80s, mid to late 80s. We see the current structure that we're in right now. These kinds of exchanges allow for real estate investors a unique way to build their portfolios, but it also allows for the agricultural sector to actually process and move product moving forward. We see these exchanges in every part of the commercial market, right? We see it in office buildings, certainly agricultural, as I already alluded to, industrial space. These kinds of exchanges happen in just about every sector of the commercial market, and they happen across the country. There's no real one region that's probably heavier than the other, although there is some data that we'll go over later that shows, how many of these transactions occur. We see them out west, we see them in rural areas of the Midwest, we see them in the Northeast, we really see them everywhere.
Yeah, and I think it's interesting, they have been around for exactly 100 years, and now all of a sudden there's question about what 1031s look like moving forward. Ryan, can you talk to us a little bit about this proposal that's being considered on Capitol Hill that would change how 1031s can be used and what types of transactions can be used for?
Sure, and thanks, Elizabeth and Jeremy, great to be with you, and real privileged to be on with John and Dawn. So thanks for the invitation. Yeah, so like-kind exchanges frequently come up in Washington, on Capitol Hill, in Congress, in the context of tax debates, because Congress is always looking for new sources of revenue to pay for things. And I wouldn't say this is a new phenomenon. People have asked questions about this provision in the past, and that's completely valid. I mean, I think it's very important that any provision in the tax code, be able to kind of stand on its own and be able to demonstrate what purpose it serves in the economy and in society and why we have it. In 2021, the conversations are rising in the context of the president's Build Back Better agenda, and specifically the American Jobs Plan and the American Families Plan, which are his 2 major kind of legislative initiatives, which would include a lot of new spending and investment, but also include a lot of revenue offsets and tax increases to pay for those. One of which that has been put forward by the president is a limitation on like-kind exchanges such that gain in excess of $500,000 for an individual, $1 million for a married couple can no longer be deferred through Section 1031. And so really would only leave behind, kind of a small, of the overall pie of like-kind exchanges, it would largely eliminate the provision and its utility to growing kind of commercial and income producing real estate businesses. So there actually isn't any legislation at this point, either standalone or coming out of committee on Section 1031. But what we know is that they're in the process of kind of converting the president's budget and his Build Back Better agenda into legislation. And so that's where kind of the rubber hits the road in terms of Congress is in the congressional Democrats, in Democrats which control Congress and are of the same party as the president, are looking very seriously at all of his proposals as potential pay-fors for moving forward with their infrastructure and human infrastructure plans.
Yeah, lots to think about in that space. John, when we were going through the bios, Jeremy mentioned that you've been working on this issue since 2014, but obviously this proposal that we're talking about now is new, which leads us to the fact that, this conversation about the value of 1031s has occurred recently in Washington, D.C. And can you talk a little bit about when this topic came up last?
Well, in 2017, as part of the Republicans' discussion surrounding tax reform, there was a proposal to eliminate Section 1031 and trade it for immediate expensing of equipment and buildings. And that's where everything revolved around. That's what brought it to the fore.
Yeah, and so ultimately that proposal failed. I think there was a lot of research and data and conversation at that point about the value, and lawmakers decided not to move forward and sort of leave the current treatment. But here we are kind of having the same conversation again with a different party in power in DC. So I guess we're going to talk a little bit more about kind of what's happening on Capitol Hill and where we think those conversations are going. But before that, I think we want to get into a little bit of the data, because really the industry has come together, and much thanks to Ryan for a lot of leadership in this area, but come together and done some data and some research kind of talking about what is the value, what is the story that we tell about how 1031s are used.
Yeah, real quick though, I thought it was interesting though. So both parties have looked at this. This is kind of a bipartisan issue, huh? So does that make it more of a challenge then to try and show the value of 1031s, or you're just sharing the same story with either side? I mean, does it matter if it's Republican or Democrat?
So, I think what happened is in both contexts, in 2017 and in 2021, in 2017, we were going through tax reform. So there was a desire to lower tax rates and eliminate tax preferences, tax incentives, deductions, credits, et cetera, in conjunction in order to get the rates lower. So congressional Republicans were looking at everything in the code and seeing, does it still make sense? And in that context, they debated what should the future be for like-kind exchanges, and they made changes. They made really important changes. They eliminated Section 1031 for personal property and left it just intact for real estate and real property. So we had a real litigation on Section 1031 4 years ago. And today, 2021, I think it's not so much about tax reform. We're not really, congressional Democrats aren't so focused on, structural reform of the tax system to make it more efficient, I don't think. It's really about a recognition that they need to raise some revenue. And then there's also members that are understandably very focused on tax fairness and tax equity and distribution of the tax burden. So those are the, and in that context, like-kind exchanges again is, generated attention because there is revenue associated with it. So, and there's, generally speaking, just not a lot of knowledge and awareness of how, if you're not in real estate or you're not in our industries, you might not necessarily know very much about the provisions. So no surprise, I don't think, that Democrats are taking their turn to look at all these issues.
Interesting perspective. Thanks for that explanation. So be able to then explain the value of like-kind exchanges. We need information. We need data. And as Elizabeth said, over the past year or so, also has had the opportunity to be part of these efforts and collect information to help tell this story. John, could you start, talking about the volume of transactions that use 1031s?
Sure. Out of a study done by Professors Ling and Provo that we had updated in 2020, they looked at 1.6 million transactions, and they estimated that between 15 and 20% of all commercial real estate transactions involve a 1031. So the volume is quite great. They didn't break out agriculture, but the Federation of Exchange Accommodators has concluded that ag is probably closer to 30%. The study further found that 80% of the investors do one 1031 and then dispose of the property in a taxable sale. This is significant because many legislatures believe in the myth that people that invest and do 1031s do it to the grave. So that debunk that myth, which is very important. So if you assume that most individual real estate investors do one 1031 and they're done, you could also assume that the average holding period, the taxes get paid probably within a 15-year period for your average investor. In terms of size, obviously most of your commercial real estate is going to be well over $1 million, so that $500,000 cap doesn't work for commercial real estate at all. This is also true for agriculture, ranches, and conservation easements. Many of them are well over $1 million. The only real estate that would fall under the $500,000 cap would be maybe single unit rentals, residential rentals, or 2 to 4 flats. Even those, a significant number of transactions would be well over the $500,000 cap, particularly on the West Coast, up in the Northwest and the Northeast. Multifamily would significantly be over that cap. So the $500,000 cap really doesn't work for anything.
Interesting. And we'll get some questions about how this would impact title companies. But you mentioned the word myth, and John, I always kind of assumed that it was large title companies that did 1031 business, but it's companies of all sizes that offer this service to as a service to their customers. So it's a wide swath of our membership, and important that we're here advocating for this. Can you talk a little bit, John, about, in addition to the real estate market benefits, some of the other economic advantages 1031s provide?
Well, we also updated another study, a macroeconomic study done by Ernst & Young, and it projected the benefit for the economy in 2021 using 2019 as its base, and concluded that nationally the transactions will support 568,000 jobs. So those jobs include jobs related to the transactions. So you got the title companies, the surveyors, the inspectors, the lawyers, the accountants, et cetera. The list goes on. It's also the trades involved in terms of upgrading and improving the property once the 1031 is done. And then all of those jobs support a number of jobs in the services industry. So it's quite broad. Those 568,000 jobs represent about $27.5 billion in labor income. Those jobs also generate $5 billion in federal taxes, which is very important. And they add about $55 billion to GDP. So just the $5 billion generated from the jobs annually far exceeds the Treasury estimate of $1.95 billion that they think they would raise by capping 1031 at 500,000. So it's clear that this doesn't raise any money. And that's what we point out to the legislators.
Well, looks like we got a question coming from Amy. Is the proposed limit on deferring up to 500,000 in gain from using a 1031 exchange, or on doing a 1031 exchange having 500,000 in relinquished property value?
So the current, the outline in the budget is $500,000 per taxpayer. So if a husband and wife, it would be $1 million.
But she's asking, is it gain or is it the property value, I think? And the answer is it's the gain.
Yeah. Now,
it's annual, so you would aggregate. Yeah, you can't do 10 $500,000 exchanges. You aggregate all your gain through exchange transactions, and whatever's over $500,000 doesn't qualify for deferral.
Okay. All right. Thank you. Ryan, 1031s also encourage investment gains into a new property. Would you mind sharing some of the data that we have on this?
Yeah, I don't have the data at my fingertips, but this is an extension of what John was talking about, basically. And it's pretty easy to understand. Essentially, 1031 encourages people to sell who would not otherwise sell. And they wouldn't sell because of the tax that they would have to pay on the sale. So, what happens is that properties that are, we would say languishing or being underinvested or not really getting the kind of improvements and attention that they need are moving in the marketplace. There's more commerce, there's more liquidity, there's more transaction activity. And then you get those properties into the hands of new owners that have the time, resources, interest to invest in them. So what the data from professors David Ling, University of Florida, Milena Petrova, Syracuse University shows is that when you compare when you compare the property capital expenditures that it was getting pre-exchange and post-exchange, there's a significant increase. So you can see the kind of lift in terms of investment into the property post-exchange, and that's that's really important in that respect.
Yeah, well, definitely lots of impact on economy, jobs. Dawn and John, can we bring it home a little bit and talk a little bit of, we've got title agents, we've got underwriters and attorneys on today's presentation. Can you talk a little bit how changes to 1031 would impact their business?
Dawn, do you want to take it?
Sure, I'll get us started. I think we're going to see some significant changes. I think we'll have, a significant negative impact, not just to, our industry and our agents and our underwriters and the lenders and the attorneys and CPAs that, work in this field, but also in the real estate market. I think we're going to, see a significant negative result from this. Would you agree, John?
I would agree. I would say it's going to feel like a recession, at least on the commercial side. Ryan mentioned, I think he was touching on the tax lock effect. When you start adding up capital gains, the Medicare tax, and depreciation recapture, you're paying an effective rate of somewhere between 30 and 55%, depending upon what state you're in. So if you don't have 1031, you're not going to want to move your investment. You're not going to pay those taxes. That's going to slow things down significantly, and people are going to hold on to their real estate. Transaction volume is going to fall significantly. Prices will fall. The cost of capital will rise, and rents will rise, particularly on multifamily.
Agreed, especially multifamily. I think it's going to see, if this were to go through, we'll see a change to that velocity within the market right now, which, certainly trying to recover after COVID-19, right, and what that's done to the commercial market. I see this as a struggle for us, certainly, if it were to go forward.
So what strikes me is that the timing on this couldn't be worse coming out of COVID. And Dawn, you're in the New York market where, tremendous struggle over the course of the last year and a half. I mean, post-COVID, what's happening in the commercial real estate space that might not happen if there's limits on 1031s?
I think John said it very well before. We're going to see less people selling those investments, right? So you're going to see less turnover. I think you could see, property values certainly start to come down. There's no advantage in my mind to this. I only see, the negative effects that can come out of it. I think that we're starting to finally see, at least in New York and outside of Boston, we're starting to see the market finally pick back up in the commercial space, in office building space, in the cities. We're just starting to see movement. I won't even say a pickup, but movement, right? And this concerns me. I'll give you an example. I mean, there was so much concern that, there was a huge push to close out all your 1031 exchanges and get them in before 21 even started, right? So it's a real fear in the market for everyone.
Well, and 1031s really help with the repurposing of property, and I suspect there's a lot of property to be repurposed, whether it's office space, as we're all working from various places right now, maybe retail, things like that really, 1031s would be a huge value versus potentially some of those properties languishing.
Absolutely.
Go ahead.
Oh, I'm sorry. I mean, we're already starting to see, retail close down and reopen again as distribution centers, for example, right? So, and I think we're just, at the very beginning of that repurposing that we have a need for, a real need in the country. And I'm sorry to have interrupted you, John. Go ahead.
That's all right. I agree. Retail is a train wreck. It was hurting before COVID. Shopping centers and malls, we could see up to 20% of them go bankrupt. So this is the wrong time to pull 1031 out of that. We see a lot of 1031 investors trying to pick up some of the distressed retail out there, strip shopping centers. The other two big areas that I think are going to be challenged a little slower are hotels. Zoom calls have permanently changed the way we, do business. In my region, I have 12 managers. We would pull them together every month or every other month and have a meeting. That's been replaced by Zoom calls. I think the sales cycle is going to be different. It's not all going to be face-to-face. There will still be parts of it that are face-to-face, but not all of it. Office is going to be a slower transition, but you could have 30% of the workforce permanently working from home. My daughter just got a job at a major market research firm in Chicago, and she was told that she would be permanently working from home 2 to 3 days a week because they just got rid of 50% of their lease. She's going to share a desk. She's got a locker, and they'll rotate people in the office. And my own company is looking at that. I've got employees that don't want to come back into the office, and if they're very experienced employees, they're very productive at home. That's going to be a deal point in terms of hiring people.
Well, definitely impact on retail, office. Same thing regarding ag land and ranches and farms. Going to have the same impact there as well.
Well, if 1031 is about 30% of your ag transactions, and you pull 1031 out, you're going to see property values fall in agriculture. That's going to affect the ability of the farmer to borrow to plant its crops, which could reduce supply, and you could actually see prices of agricultural products go up because there's a supply shortage. That would be the transition, but it could create significant negative effects in agriculture.
Yeah, I've talked to some of our members who are in rural areas who talk about how 1031s are used in agriculture, even to, help farmers consolidate into closer proximity the lands that they're farming. And I know it's used a lot too for conservation lands. I don't know, Ryan, if you can speak to some of those uses as well.
Yeah, that's been one of the interesting things that's very much underappreciated with like-kind exchanges is the extent to which communities, land trusts, conservation organizations, nonprofits will basically use it kind of as an enticement to private property owners to sell land or exchange for other land. So that the nonprofit or the community can then conserve it, put it to public use, preserve it for posterity, and generate a lot of conservation benefits. So we have a very broad-based kind of coalition on this issue. We've talked already a lot about the farming and agriculture component, but there's a number of environmental groups that care deeply about this issue as well, because they recognize that this is a very common tool in the toolbox that they're able to use to facilitate conservation transactions. And those aren't just necessarily parkland. Well, not necessarily preserving land untouched, but can also be for, like I said, public use in terms of community parks and areas in urban communities, or areas that people are going to use frequently and benefit from.
Yeah, one of the things we're doing at Alta right now, because stories about these types of transactions that are happening in your area are so helpful, especially when we're talking to members of Congress. So on the Alta website, if you go to the TAN page, the Title Action Network page, there's a survey link there, or you can always email us your stories, but like examples of, agricultural conservation, repurposing of languishing properties. These are the types of things that lawmakers really need to hear about, because there's huge community impact.
We had a question come in a little bit ago from Deborah regarding LLCs and incorporated companies, and she was curious if they are considered to fall under individual limitations, or where they end up on the aggregate dollar amount limitation.
Yeah, so it's the taxpayer based. So if it's a pass-through entity, then you would look at the individual part. So if it's an LLC, I guess that's treated as a partnership for tax purposes, then I think the cap would apply to the individual partners. If it's an entity, corporation or otherwise, that is a tax-paying entity itself, then I think the cap would apply at the entity level.
We talked a little bit about, the retail, office, farmland. Any additional information just to help people, on the call get a better understanding, like what parts of the region may be impacted more? We're talking, cities, New York, probably epicenter, Chicago, LA, and is it urban versus rural, or is it, a mix?
I think that the evidence is pretty conclusive that this is a provision that's widely used throughout the country, every region, every district. And yeah, I think that is a development that was not always the case. I think there's this assumption out there that this is kind of a niche issue used by a handful of people. But what the more recent research shows is that this is kind of core to how real estate markets function and how real estate gets financed, really. And when we say, 1 in 5 transactions, one of the parties is engaged in a like-kind exchange, that's kind of proving that point. But, in terms of regionally, I think it's probably most important in high appreciation areas where you're going to have a lot of gain. Also areas that are high tax. Most states are going to have a benefit that coincides at the state level with the federal like-kind exchange benefit. I'm not sure that they all do, but most states you can get the same type of deferral on an exchange at the state level, especially if both the relinquished property and the replacement property are both located in the state. I think it's easier in those cases. So, I would say what our data shows is the West Coast and the mountain states, it's extremely widely used, but I don't think there's anywhere in the country where it's not prevalent.
John, did you have anything to add to that?
I agree with Ryan, so you'd be the West Coast, the Northwest. I think the Northeast will be hit hard, and those tend to be the higher tax states. But it's used throughout the country, and it is core to real estate. So you can't dismiss any part of the country.
And I think that's the surprising part, John. I think I'm not sure that everybody really understands that 1031s are used. I think everybody has their own idea of it, right? If you're from the Northeast or from Chicago, you think, oh, 1031 is office building, exchanges for that. You don't recognize the heavy reliance on it in agricultural use, agricultural or rural land. So it's really amazing how far reaching it really is and how it's used differently in each region.
Elizabeth, we have a question about, what could happen, what's the process? You want to get into the political landscape a little bit?
Yeah, let's talk about, let's all take a look into the crystal ball here. I'm gonna put you on the spot, Ryan. What are the likelihood of this happening? What's happening with the conversations with lawmakers around this?
Yeah. Well, so I think there's two questions. One is, are we going to have a big tax bill? So that's the threshold question, and we can talk about that. And then if we are going to have a big tax bill, is a limitation on like-kind exchanges going to be in it? But going back to the first question, I mean, anyone that tells you with any certainty that they know whether we're going to have a big tax bill is not telling the truth. I don't think the members of Congress themselves know whether they're going to be successful in getting these large, ambitious measures enacted into the law. We're going to have a vote in the Senate very shortly, in about an hour, just to move forward with debate on the infrastructure, on the bipartisan infrastructure bill. It looks like that vote's going to fail, requiring them to maybe try it again next Monday. But they have not yet been able to reach, agreement on a bipartisan infrastructure bill that's not going to include tax increases. And then, the idea is that we have a two-track process. The current plan is to two-track process, have a bipartisan infrastructure bill, and then a kind of party line 50 vote simple majority tax and reconciliation bill that's not going to need Republican votes. And that's kind of the play that's been launched by the administration and by the congressional leaders. And it's very unclear whether they're going to succeed with that right now or not. If I had to guess, I'd say 60 to 70% chance that we have a big tax bill enacted into law at the end of the day. I just think people, and at the end of the day, they're going to decide they need to get something done, even though their margins are so small and so slim, and there's so much different views inside the Democratic caucus, from the progressives to the moderates. I think there's a lot of pressure just to have some accomplishments. So I do think they're likely to pass a bill, which gets you to the second question: is like-kind exchanges going to be in that? There again, I feel cautiously optimistic that this coalition, of which John, Don, Elizabeth, you, and Alta, and others are really been helpful and involved and engaged in. I think we're having a significant impact on this issue. It doesn't raise a ton of money. It clearly, we believe, would have some severe negative economic consequences. And there are just easier ways for Congress to go about doing what it wants to do in terms of raising rates, corporate rates, ordinary rates, or even just the general capital gains rate. So that's not to say, certainly not a done deal, but I feel like we've made progress, that I'm generally optimistic, but that we have a lot more to do to persuade all the Democrats up on the Hill, which is who we're focused on because they control things right now, that this would be a mistake for them to enact significant limitations on.
If it doesn't generate that much revenue, why is it even a consideration?
So, I think I said earlier that I think there's two things driving taxes in 2021, tax policy. One is revenue. The other is the tax fairness and equity issue. So, it falls upon us to demonstrate that this is a provision that people of all economic classes are able to use and benefit from, and actually increases economic mobility. Because if you look at how the president phrased this issue in his initial release, he referred to it as a tax break for investors. And so, the idea out there is that people are sitting on their sofa with their legs up, receiving checks in the mail. But that's not really what's going on with like-kind exchanges. It's a provision for businesses that are financing their growth. You don't get it if you take money out. You only get it if you reinvest in the business. And so it's how they finance expansion, investment, new jobs, new capital expenditures. So why would they do it? Because there is a perception in some corners that it's doesn't, it's not, that's not what it's about, that it's about a tax shelter. But we know that's not the case.
Right, because it's a deferral, basically. It's not a tax break.
Correct. It's a deferral, and it generates more taxes than they score it as raising if they cap it. So it's the math doesn't work for them. We just got to keep pounding away at that.
Well, it raises a lot of revenue for states and local governments, right? The more
Yes,
that you're
it does.
Absolutely.
About $3 billion a year. Ernst & Young concluded that. That's a part of the study. So, that's all kinds of taxes. That's mortgage taxes, transfer taxes, recording fees. It's income taxes from those 568,000 jobs. And then you've got the property taxes because of increased valuations due to a healthy real estate market.
So it sounds like we need to have some conversations with lawmakers and kind of keep the pressure on. We want to talk about how everybody who's joining with this webinar participates in that. And then, I know John and Ryan, you've been in conversations with lawmakers on a real regular basis, probably multiple times a week on this topic, and would love to hear what they're saying about this. What is the kind of feedback you're getting in those conversations that might help as we look to go out and advocate?
Yeah, I think it's overwhelmingly positive, but there's a lot of information that, excuse me, a lot of people come at this with low information, so they just don't know very much about the provision. So that's one of the good things that the coalition is doing, is just educating members of Congress about it. But I think there's a clear recognition that real estate is important to the economy. It's important to jobs. It's important to local taxes, revenue, and communities, and retirement savings. So they're not looking to cause severe damages to the commercial real estate industry, but they haven't necessarily put together all the dots on how repealing like-kind exchanges could have those implications. So we're kind of trying to draw that connection for them so they really understand. And it really goes back to that this is core to the functioning of commercial real estate markets now, that it's such a large percentage of how transactions are able to kind of get done. Real estate is so capital intensive. I mean, nobody goes out and buys real estate with all cash. I mean, you have to be bringing a combination of things to the table, from loans and financing to equity, and like-kind exchanges allow you to bring a significant pool of capital to the table to purchase your next property. That's a really good thing. Why would we want to stop that?
I would like to add that they react to people they hear from. If you don't say anything, then they'll go. Then they assume that it doesn't matter and there's no cost to it. So they'll do whatever they want, regardless of what we do. So it's important for everybody out there. If you haven't sent a letter to your congressmen and senators, it's important to do that. You can do that through the ALTA website, or you can do that by just doing your own. It's also easy to get a meeting with your legislator. That's when I first went up to the Hill, I was a little intimidated. After about a couple hours, I wasn't. Because you realize they're just like you. And in fact, on this particular issue, you will know more than they do, probably. So you're going to be bringing them information. And if they know that it's important to you and you're a constituent and you explain why it's important to your business, that will have a big impact.
Yeah, absolutely. Dawn, I know you've done a lot of work with New York State Land Title Association, especially in the advocacy space, and that's like such an important thing. Suggestions you have for folks to be reaching out to lawmakers on this?
Sure. I think John and Ryan both hit on a couple of important things. First of all, there's nothing to be scared of, right, or intimidated by. So what's really helpful to make you feel more comfortable is, rely on Alta, rely on their talking points. We have a ton of information on the website that gives you all the information you need so that you can sit down, read it, and really feel comfortable having a conversation. Also, let the folks at Alta know if you are meeting with someone, because they can help you and they can track that for issues moving forward. I really encourage people to get out there and do it. If this matters to you and it matters to your community, then your legislators want to hear from you. They really do. And again, Alta's made it incredibly easy for you. Everything is succinct and in one place for you to look at, right? But it'll give you opportunities and talking points like bringing up the benefits of the 1031 and how much money that they raise and how much tax dollars that they raise. And you will for sure know more about it than most of your legislators that you'll meet with. So please don't feel intimidated. Get out there and have a phone call or have a Zoom meeting, have a conversation. Once you do the first one, it's easy after that, I promise.
Yeah, and then take all the information and then localize it, make it your story,
Yes.
Share an example of a transaction you handled of then how that is repurposed and was to a benefit in your community. Yeah.
Absolutely. And share those stories with the folks at Alta, because then they can share them over and over and over again. Your one story can help this cause across the country. So it's important.
Yeah, we think of this as, part of the tax code, but it's really connecting those dots, as Ryan said, to individual transactions for real people in real communities that these members of Congress represent. It makes such a big difference. We have done a TAN alert on 1031s. We will send a reminder out on that, but that's another way. It's easy to just go in, send a pre-drafted message. You can go in and edit it, personalize it, add some of those stories, and send that in. So we make it easy. Dawn mentioned the web page. We have talking points. Next week, we have a new video coming out. It's a 2-minute video about the benefits of like-kind exchanges for communities, the types of transactions they're used in. So you can utilize that in your conversations. And, if you say, hey, I have a relationship with my member of Congress, or, am willing to talk with them, we're happy to help you set up those meetings. We're happy to participate in the initial ones so that it's easy and something that really feels approachable, but it makes such a big difference. So you can go to the Alta website, to the 1031 page, or to the Title Action Network page, and get involved. And Ryan, I know that, obviously talking to all members of Congress on this is important. We want to hit as many people as possible, but there's certain committees and different groups that we should be focused on. So if you're thinking about your member of Congress, if they serve on certain committees, they sort of come to the top in order of priority. Can you share what some of those committees might be, or specific members?
Yeah, so tax legislation goes through, in the House, the Ways and Means Committee, in the Senate, the Finance Committee. I think there's about 26 members on the Finance Committee, evenly split between the two parties, and 40 or so on Ways and Means. So they're really key. I do think whatever gets done will originate and go through, and so those will be the starting place. And I suspect things are going to start in the Senate, just because there's no room for error in the Senate. And so I think the House kind of wants to, see what can actually pass there before they kind of go on the record on a lot of these issues. So the chairman of the Senate Finance Committee is Ron Wyden from Oregon. He's been in Congress for a number of years. He's very familiar with this issue. They obviously have a very big timber industry out in Oregon, and this is a commonly used thing in forestry and timber, but also just more generally in the state as well. So, I don't have the list of names for all the members serving on that committee right in front of me, but that's something people can easily access. That's a good place. But I wouldn't stop there. It's really about where are you and where's your physical footprint, and where do you have a presence, where do you have employees, where are you kind of contributing to economic activity. Those are the members of Congress in those areas that you want to be reaching out to, because you are their constituent, and so they have an interest in the health and well-being of your business there. So I would not stop just at the tax writing committees.
Excellent. Well, we're hoping folks will reach out, and it's certainly a topic we're going to be advocating on. It was a priority for us at Advocacy Summit. We're doing an Advocacy August where it's also a priority. So think about how you can get involved. Doesn't have to take a lot of time, but can certainly be very, very impactful.
To get involved, and anyone who doesn't is already involved or a member of TAN, you want to just briefly explain what Title Action Network is?
Yeah, so Title Action Network, TAN for short. We like our acronyms around here. It's basically you sign up to get alerts. They can come from maybe your state land title association. Dawn can talk about New York is our biggest user of TAN. We have our most TAN members in the state of New York. So I always love advocating and doing grassroots there. So you might get alerts on state legislation, but you'll also get alerts on, hey, here's what's happening in Congress that could directly impact your business. And then at that point, you have the opportunity to just do easy steps. Click a little red take action button, go to a pre-drafted message. You have the ability to edit that message, personalize it, and then it goes directly to your legislators. It's that simple. You can, spend 5 minutes or less and really make an impact.
Yeah, and it's free to join. And as Elizabeth said, if you don't know your member of Congress, it will identify who your representative is. So it's really easy to make that connection. Alta.org/TAN. So sign up.
Get involved.
To wrap up, you want to talk about, well, we just talked about TAN and how to get involved. So anything else we want to touch on? Ryan, any other tax proposals out there on the table that people in the call should be aware of?
So real estate is definitely front and center, I think, in the current Congress with a lot of the tax proposals. Like-kind exchanges, I would certainly put at the top of the list. But if you are in the real estate industry or in the real estate business, you certainly understand the importance of capital gains and a reduced tax rate on capital gains to encourage kind of long-term investment in capital-intensive industries like real estate. So there's potential for changes in the capital gains rate. Carried interest is a big issue for us as well. There's about 2 million real estate partnerships in the country, a large percentage, probably the majority of which have some component of carried interest. And that's part of the president's proposal. And then you have changes associated with kind of taxation of gains at death, eliminating the step up in basis of assets when somebody dies and actually taxing built-in gains at death. This is part of the president's proposal as well. So a lot of things that would affect capital formation, a lot of things that would affect kind of long-term savings and investment, all of which are really important to real estate. The only proposal that is, however, solely focused on real estate is really the like-kind exchange change. Because of post-2017, the only assets that qualify for, as we talked about, exchanges are real estate. So that proposal really is kind of a rifle shot at something very important to the industry.
All right, well, that was a lot of great information. Let everyone on the call know the potential impact and what they can do now to get involved and help advocate for 1031s. As I mentioned earlier, we did answer some questions. If you have anything else pop in your mind, submit them. We'll have a few more minutes before the top of the hour. If you missed any parts of today's webinar, if you think others in your office would benefit from listening, again, you'll get a recording tomorrow and an email. And again, you can always go to ALTA's website, alta.org/webinars for our full archive of presentations. Before wrapping up, I do want to thank FNF once again for sponsoring today's webinar, and just wanted to note a few other upcoming presentations for our commercial network. In August, we'll dig into the impact the changes to the ALTA policy forms will have on commercial transactions. And then in September, we're going to focus on changes to the 47 series endorsements and addendums following the Supreme Court decision in the McGirt versus Oklahoma case. And I think, Elizabeth, you were calling that the dirt on McGirt.
Yeah, the dirt on McGirt. I mean, everybody wants to participate in that webinar. And,
Right.
and it's all leading up to our in-person meeting in February. But before that, we have a commercial track at Alta One as well. So lots of good information gonna happen there about what's happening in commercial real estate. And you can go and just really focus your Alta One experience on commercial transactions.
Alta One in October in New Orleans will be in person, and we'll actually also have a virtual component. So, if you can't join us, down south, we'd love to have you, virtually as well. Registration's open. You can go to, again, Alta website, alta.org/1 for that. And thank you, everyone, for joining us. Any last comments or, forecasts on potential, passage for this, or, just a lot of dominoes, I guess, that got to happen.
You got to keep fighting hard. So that's what we're going to do.
Yeah.
All right. Well, Elizabeth, thank you for joining me today here in our, makeshift Alta office.
Right.
Live together. So with that will bring us to the conclusion of today's presentation. Take care, everyone.
Thanks a lot.
Thank
Bye.
you.
Bye-bye.